Let me ask you this, Steve. So Peter Bukvar today, who is a very smart strategist like yourself, telling his clients this morning, he said for the past month or so, Steve, that Nvidia is what he's been making a beeline for. Not the 10-year. He goes right to Nvidia, sort of his gauge, his general barometer. Is that what you've been doing, Steve? Are you as focused on Nvidia, Jensen Huang's company?
For better or worse, I have no choice but to be.
Why do you say that, Steve?
Because it's Nvidia's market and we're all just trading in it. I mean, realistically, it's been dragging us higher. And, you could see now we're in a bit of an interesting little cycle where the index, if you look at the major indices, and I'll define them as S&P 500 and NASDAQ 100, they move with Nvidia. And, yesterday, for example, they sold off, not, S&P not in a major way, because the difference was the advancers on the NYSE outpaced decliners 2-1. Today, it's the opposite. So you've got Nvidia and the big cap techs pulling the market higher, whereas most of the stocks are lower. So it's this weird Nvidia and friends vis-a-vis everybody else. And it's a strange dynamic right now.
Now, it's interesting because I know you saw the piece that our Josh Schaefer highlighted today with some research from BlackRock saying that tech mega caps leading is not necessarily a bad thing because their earnings are doing well. So it's not as though they're leading with sort of nothing behind it. Is that how you see things though?
Yes, but I mentioned I happened to see Josh on the way in.
Yeah.
And,
he might have told us that.
Yes, but the reason is, I'm not going to contest the data, and I guess it's not necessarily the death knell if it's a narrow rally, but just something nags at me that, because if everybody's trying to crowd into one particular sector, what happens if they try to get out? And that becomes very problematic. We didn't see that become a problem yesterday. I think that's because of end of the quarter factors, making it more of a rotation. Yes, these companies do earn very good money. And someone asked me today, is Nvidia, would you buy Nvidia at these levels? And my comment was kind of neither here nor there because it's not cheap, but it's not expensive either because they do earn ridiculous amounts of money. It's just how much growth is priced in. And if they meet their growth targets, if they continue to grow at this exponential rate, it's not an expensive stock. If there's the slightest stumble, they are priced to perfection, and that's where the risk comes in.
But are you surprised though? Because obviously this has been the big theme. The rally's been narrow, right? Are you surprised that it's been narrow? Because some would say, Steve, of course these are the companies that are leading. These are, so the argument will go, our biggest, most innovative, dynamic, disruptive companies out there. Of course they should be leading.
They should be leading, but to what extent should they be just leading and leaving everybody else behind is more the question. One of my themes for the year to date so far has been weaponized FOMO, and I think that's really what's driven a lot.
What do you mean by weaponized FOMO?
FOMO being fear of missing out. It's something that we all have. Just go on Instagram one day and you'll get it when you see what one of your friends is doing. But in reality, for institutional portfolio managers, it's the real deal. And the reason being is they can't be behind their peers, right? So, if that guy over there is making a ton of money in Nvidia or that guy's making it in GameStop, okay, I may not have put all my chips on the table, that's fine. But if I'm an institutional investor, I can't professionally be in that bottom quartile. I can't miss this rally. I can't hear from my investors saying, what are you doing out there? So I think what happens is that's where the piling on effect comes in, and we see it. Some of them are, heavily weighted in the stocks themselves. Some of them are using options because they may not want to put all their eggs in one basket, so they'll buy call options, which give them the exposure to the upside while limiting their downside risk.
I'm glad you mentioned that because I want to highlight a chart that came to us from Deutsche Bank today, from Jim Reed highlighting it as his chart of the day, where he's looking at call option volume in mega cap growth in tech, which is all the way on the right side of your screen. It's hard to see, but there was a big spike in that versus the rest of the S&P 500. Now, Deutsche Bank is arguing that maybe that's reason for a pause now in that upward momentum. I don't know if the last few days already qualified as the pause, but what do you think? How do you read that huge spike in activity?
This is where I start to get concerned that it's what we call a blow-off sometimes, when you just really get everybody piling in because it can't go down because we're just going to get on one side of the trade. That's usually when these things have a weird ending. Parabolic moves, and we've seen one in Nvidia, end in very unpredictable and often nasty ways. I'm not saying that this means Nvidia is going to hell in a handbasket, but what it means is when that big upsurge ends, that's usually accompanied by a lot of volatility because there's a lot of disruption. When the sure thing pans out, if everybody buys it, who's left to keep buying it? That's kind of the problem.
Yeah. I want to switch gears a bit. Some economic data on tap, PCE. Steve, how important is that? Is that print going to be for the market?
Very, and so I'll give you more than a one-word answer. I think if we're talking about a very data-dependent Fed, and we are, the market's pricing in a year-over-year rise of 2.6, which I believe is because of a 0.1% rise anticipated. So that is definitely helping the disinflation argument. Now, 2.6 is not 2. I don't know if they need to really get to 2. I think they seem to be towing the line about we need to get to 2, barring some economic hiccup. So I think any number that diverges from that will change the narrative about Fed policy. A higher reading, I think people will get a little freaked out and say, all right, well, maybe maybe the idea of 2 rate cuts this year, 1 to 2 should be 0 to 1 or not at all. On the other hand, if the number is very encouraging, I think you'll hear a lot of talk about, Fed cutting sooner and quicker.
By the same token, we've talked to a lot of folks lately who say it doesn't really matter that much this year, if it's 1, if it's 2, if it's none, in terms of the market ultimately where the markets end the year.
Has it mattered that we went from expecting 6, 7 rate cuts to 1 to 2? No, it hasn't made a difference. Part of that is because the economy helped. I mean, it was inconceivable that we would have a solid economy and 6 to 7 rate cuts. They're mutually exclusive. And I think I've said to you before that, if given the choice, I'll always take the stronger economy.
Yes.
So if the terminal rate at the end of the year is, instead of 5 1/4, if it's 5, if it's even 4.3, 4 3/4, or 4.5, really, what's the difference? It's not a big deal. You'll still have probably some sort of positive real rate of return, on the risk-free assets, call them T-bills. And so it doesn't change the narrative all that much, but I think markets want to see the direction. And they really, I will say to this point, they haven't cared that the direction hasn't been in their favor. It hasn't made a difference.
Okay, I can't let you get out of here without talking politics, Steve. You know that, it's the rules.
Yep.
Thursday, presidential debate, Biden, Trump. As a strategist, what are you watching for? What are you listening for?
I'm listening for something that will sort of disrupt the 50-50-ness of the race. Either one of these guys is gaffe prone. I'm not, I think just, will one of them say something that'll move policy one or the other? I think Biden's policy announcements have been more consistent, let's say, than his challengers. But I think really just something that really is an out of the box circumstance that we talk about. I think if they just sort of get through the debate without too many fireworks one way or the other, we muddle on until the next debate or until November.
Yeah.